my name's Justin Bradburn. I'm a principal at CarVal. I think without a shadow of a doubt, this is the most compelling, but also, frankly, the most challenging market I've certainly seen in my 22 years of aviation investing. The current market is much more distressed than either 9/11 or the global financial crisis. And I was a very active investor in both of those downturns. I believe the next 2 years will present opportunities to acquire aircraft at levels that are very compelling long term. Ultimately, aviation has proven to be a very efficient and safe way to travel. And until some other form of technology comes along to replace it, it's here to stay. And so aircraft will continue to be a safe bet for the long term. The latest data we're seeing reflects daily departures. And so that's sort of actual flights. And we estimate daily departures from the 50 largest global airports are about 75% of January levels. US has sort of held up a little bit better than Europe, primarily because the government kind of forced the airlines to continue to fly. What we don't have visibility to yet is how many people are actually on those aircraft. And so pre-COVID, most planes, about 85% of their seats were filled. In March, IATA, which is a industry body that represents the airlines, released data that stated that levels had fallen to about 61%. And I'm highly confident that that number was a lot lower in April and May. So what they're predicting at the moment, very much a prediction, is that in 2020 and 2021, they expect global passenger demand to be about 50% of 2019, and then 24% below 2019 levels in 2021. And they don't expect traffic to really get back up to 2019 levels until 2023. We did some work independently on this. And we finished that last week, and we came out at about down 50% for this year, down 30% for next year, a couple more weak years, and then we probably get back to parity with 2019 in about 2024. But like I said, frankly, at this point, we're all kind of guessing a little. And any scenario is highly dependent on what happens with the opening of economies and the relaxation of travel restrictions. I mean, if we see lockdowns extended into Q3 and possibly even into Q4, or we see a significant second wave of the virus, this will obviously further delay the recovery of air travel. That's not inconsistent with what we saw after 9/11 and the global financial crisis. It took about 3 to 4 years before we saw traffic return to pre-crisis levels. But I think what is different here is the depth of the downturn is significantly more deep. So in terms of the support to the airlines, I think it's important to think about it really in two different ways. There's direct support to the economy, because airline performance is traditionally very tied to underlying GDP. And I think when you look at those numbers, GDP is clearly leading the pack with subsidies, grants, loans, somewhere in the region of about 35% of GDP. In the US, I think it's running about 12% of GDP. And this is important because if people have money in their pockets or businesses are productive, that will naturally stimulate traffic. And then the second piece is obviously direct support to the airlines. And this is varied wildly from country to country. In the US, we've seen about $58 billion of support be allocated to the airlines, roughly half in the form of grants and long-term unsecured loans. And then another half in the form of secured loans, which they're still in the process of negotiating. In Europe, we've seen the French government provide a $3 billion subordinated unsecured loan to Air France, and a $7 billion financing package, which they'll backstop about 90% of. So it kind of widely varies across the world. And this does create some interesting long-term dynamics where what we're seeing is good, well-run airlines that have access to the lending and capital markets historically have been told to go there, and weak, poorly run airlines are getting bailed out. And so long term, this isn't good for the industry in aggregate, because it's going to keep airlines around that effectively are bad behaviors. Yeah, absolutely. I mean, frankly, it was already happening. And so one of the things that surprised me last year, there was not many people focused on the default rates. And in 2019, it was actually the worst year in history for aviation defaults. We had 42 airlines default. They were flying 637 aircraft, and that was essentially an 8.4% default rate. So that was last year, and nobody was really talking about it. So in the present environment, what we're seeing or hearing from other friends in the lessor community is that about 90% of airlines are seeking some sort of forbearance at the moment. So call that a quasi-quiet restructuring. Undoubtedly, we'll see more of these consensual restructurings turn into full-on defaults. It might take a little bit of time, but I do anticipate defaults, certainly in the back half of this year and into next year, to exceed 2019 levels, and probably significantly exceed them. Frankly, at CarVal, we were bearish before COVID even appeared, and we had been aggressively reducing risk. Our exposure coming into the situation was a third of what it was in 2017. And we were bearish before this even started, because there was oversupply coming into the market. There was simply too many planes being made. That oversupply issue has now been compounded by this historically bad demand-driven hit that the COVID crisis has caused. I think the key over the next few years is to continue to focus on aircraft that have a large installed base of operators, that are well liked by airlines, that are in demand by a broad base of buyers. We tend to believe newer aircraft are more attractive. We believe that a large number of older aircraft that need to retire will make the midlife and end-of-life markets very, very challenging to navigate. And as I said, if we're right on our retirement forecast of 5,600 planes, you could see, and this is sort of a simplistic analysis, but you could see 63% of 15 to 20-year-old aircraft get retired, and 100% of any aircraft over the age of 20 years. The other area that we are seeing some interesting stuff going on is the structured aircraft paper market, particularly some of the senior tranches and some aircraft ABS deals, and we're keeping a very close eye on those markets for opportunities.